recovery which is currently underway. So even in the Asian markets, the Hang Seng has recovered about 550 points from the lows. For the Nifty, it's back in the green, so a recovery of close to about 50 points from the low point of the day. The mid-cap still deep in the red, down close to about 1%, but again, off the lows. Hi.
Hi, Rima. Absolutely. I think for India, we've got the twin tailwinds also coming in with the fall that we saw in the US market. We also saw the fall in oil prices. So that continues to be, of course, very, very positive. And not just that, the hope of resolution and complete dissipation of the tensions between North Block and Reserve Bank of India. Perhaps that's also aiding sentiment. And the fact that we kind of preempted the fall with the 1% slide yesterday. All things put together, that's the picture on the screen, and the market is right now looking quite comfortable, actually. The Nifty 6 points positive around the 10,490 mark thereabouts. So, well, we will tell you more about the stock-specific action as we go along. Let's get started. Here are the headlines at 12 noon. The Nifty and Sensex choppy in a narrow range, though Indian market outperforms Asian peers. Oil marketing companies gain. The auto pack falters, led by extended selling in Tata Motors. Mid-cap stocks take a sharp knock.
The Reserve Bank governor visits Prime Minister Modi. Sources say a middle ground may have been found. The rupee appreciates, is the best performing currency today. That's an exclusive.
Crude oil prices tumbled below $70 a barrel on Brent after US President Donald Trump puts pressure on OPEC not to cut supply to prop up the market. Shares of oil marketing companies surge.
Pharma is the worst performing index today. Sun Pharma takes a knock ahead of Q2 numbers. Aurobindo Pharma slips despite reporting good numbers. Wockhardt takes a knock after losing an appeal to launch the generic version of a cancer drug, Zytiga.
The Bank of India stock under pressure following another quarter of losses at the bank. The management assures investors that they will post a profit in the third quarter. Jet Airways rises despite a weak performance in the second quarter on reports of possible interest coming in from the Tatas.
Okay, on to the top story then. First signs of a thaw after a heated battle between the government and the RBI over the last few weeks. Sources tell us that the RBI Governor Urjit Patel met Prime Minister Narendra Modi on Friday, and there could be some give and take between the two parties ahead of the crucial board meeting, which is scheduled for the 19th of this month. The money market has taken this news positively. The rupee is appreciated. In fact, it's the best performing currency today. Lata, who broke the story, joins us with all the details. Lata, we thought that the 19th of November board meeting would have been a stormy one, given so many flashpoints between the RBI and the government. But it looks like it could be headed towards a compromise rather than a conflict.
Yes, it will continue to be an important board meeting where important issues have to be thrashed out between the government and RBI. But now it does look that it will end in rapprochement and not in exits. The big news break yesterday was that Dr. Patel, the governor, had flown down to Delhi on Friday and met the PM. No one, of course, is privy to what happened there. But since then, there have been some plans from both sides to try and find middle ground. We already heard reports from Delhi speaking about not wanting the capital at all of RBI, but actually looking for a framework within which both the capital will be determined for all time and surpluses on a yearly basis will be determined. So maybe a committee will be appointed. They've climbed down from that position. The Reserve Bank, on its part, is expected to take out some of the banks from the PCA in good time. I mean, it's not that it might happen on November 19th itself, but there are already some banks that are closer to that 6% limit of net NPAs. And if the government were to give them some capital, then they would pass all the filters. Or almost pass all the filters, and they could be taken out of PCA as well. Anyway, PNB was not even put in PCA list, although it ticked all the boxes. That also was a concession the Reserve Bank had shown. And a couple of banks which are getting merged into larger entities could also be candidates who could be taken out of PCA. So before the year is out, the Reserve Bank may find a lot of companies willing to, lend loans more than they are now allowed to. There is definitely some package coming for SMEs. I don't know what the contours might be, maybe easy restructuring or a longer day repayment that was given to them anyway during GST and demonetization, an extension of repayment time, something like that. But definitely there is a seeking of middle ground on that issue as well. So the big point for the rupee market, which is why it is an outperformer. Of course, crude is a big tailwind for the rupee. But the other thing is it's heaving a sigh of relief. To deal with an accident at the central bank is never easy for any currency market. The fact that now we are going to see a normal completion of a term by the governor is a very, very big positive for the rupee. India has always prided that it has a stable monetary policy and central banking system. That faith is reiterated.
Okay, in fact, let's get in some reactions as well. Neeraj Gambhir, the independent expert, joins us on the phone line. Neeraj, first on the point of this relaxation of PCA, the prompt corrective action, if it does indeed take place, as we've picked up from our sources, how will you read it? Because Viral Acharya in his speech had said, he had defended it, saying that the banks require the medicine to prevent further hemorrhaging of the bank's balance sheet. How would you read that move if it comes through?
So, this is probably going to ease a little bit more liberally to those sections of the of the market. So my sense is that we need to see a little bit more detail before we are able to ascertain whether it will have actually a meaningful and a credible impact in terms of the credit flow to the economy.
Okay. Well, Neeraj, good morning. Thanks for joining. The more important issue is that there aren't going to be any accidents at the central bank from what we have recently picked up over the past 24 hours. What would be the currency market's view of this development?
So this is certainly very positive. There are always differences between the government and the Reserve Bank and the central bank, as we've seen across the world. The government's push for growth and central bank's push for stability. And there is always a give and take. It was quite unfortunate that this, sort of negotiation took such an ugly turn and it came out in the press in such a bad way. But now that things are sort of getting back to a little bit of more normalcy, I feel that it is indeed quite a bit of positive. And a lot of international investors had also commented about this thing, that this is something that the government and RBI need to sort out amongst themselves. And clearly we are headed in that direction, and I think that's very positive for the currency. Though I personally feel that, after this thing has settled down, the markets will start looking back at the fundamental factors, which is, how the crude prices are behaving, what's the overall flow of, liquidity into India, impact of Federal Reserve tightening on the markets and dollar liquidity, etc. So I think for a short period of time, this was a big concern, and it seems to be getting resolved.
So, Neeraj, just one quick question from my side then, so to be here. I mean, one important premise on which this entire hope is based, that there will be a thaw, is that the government is going to relinquish its persistent sort of claim of getting more money from the Reserve Bank of India. It will not go ahead and make that demand on the RBI reserves. Now, while that's a great thing, I mean, in the overall context, in the immediate term, is that going to revive any concerns on the deficit? Is there a number that you, for instance, have in mind in terms of how much money will the government get from the RBI this year?
So I don't think that, in my mind, I had ever imagined that Reserve Bank will actually dip into its reserves to fund government's deficit, because remember, there is also another MOU between the government and the RBI, which is that there is not going to be any automatic monetization of the deficit. And this would have been tantamount to an automatic monetization of the deficit. Even if you assume they found a way within the current legal framework to do it, which itself is a question mark, I don't think, in my mind, this would have resulted in any kind of monetization of the deficit. It would have been a below-the-line kind of an item, if at all. But I think what is certainly happening as a result of this, and if indeed that's the direction this thing takes, is that they set up a committee, and the committee looks at yet again what is the right level of capitalization for the central bank and how much money the central bank needs to pay back to the government as an annual dividend. And that annual dividend sort of will vary depending upon, the level of interest rates in the economy and the kind of FX, revaluation reserves that they end up making at the end of the year. So there is a lot of volatility in the central bank's own income that needs to be taken care of. So I think it will be quite positive if they come up with a committee framework which looks at it, which does a cross-country comparison, and then looks at what is the right level of capitalization. The biggest challenge is that we don't have a internationally agreed upon framework for central bank capital. Whereas we have an internationally agreed upon framework for the banking system's capital, central banks, each one of them, because they face very different sort of situations and circumstances, and the balance sheets are quite different, end up having a different level of capitalization depending upon what they feel comfortable with. So if this committee looks at cross-country, evidence and then comes up with some level which is then formalized into a MOU sort of between the government and the RBI, so that we sort of settle this issue for once and all, because this seems to be an ongoing issue again and again, which happens every few years, whether it's with respect to FX reserves or whether it's with respect to the the capital level of the RBI.
Okay. Well, Neeraj, now that you have us, that we have you with us, what's your take on the debt market? You're, of course, now an objective observer. Is the fear of any systemic or contagion behind us now?
Yeah, I think we seem to have passed, a big worrisome time, and things seem to be settling down and slowly and steadily. Money seems to be coming back into the mutual fund system, and remember, mutual funds, once they start getting liquidity in their hands, they have to find, avenues to deploy it. They just can't sit on it. And given the fact that almost 70 to 80% of supply of corporate debt was coming from NBFCs, so my guess is that some bit of money will start flowing back into the bigger ones and the better capitalized ones and the better, better perceived ones. So I think that thaw will happen, and we probably have avoided a very serious accident, and it seems to have been contained for now. I think from here onwards, the market will revert back to looking at the fundamentals, which is basically how the crude prices are doing, what's going to happen to the currency, and the overall flow of liquidity. So those things will once again acquire a center stage. Also, it feels like the Reserve Bank will have to buy quite a bit of government bonds going into the next few months to normalize the liquidity in the system, and that should provide a good bid into the bond markets, and that sort of will support the price level.
Okay.
One lever that's picking up, there's a 0.25% gain now. That is a stock on the move for the time being. Well, right now, let's get another corporate conversation going. Godrej Industries came out with its second quarter's numbers yesterday. It was an operational miss for the company in this quarter. Earnings were impacted by higher cost of materials and weakness in the animal feeds and the vegetable oils business. My colleague Priya Sheth caught up with Adi Godrej, chairman of the Godrej Group, and began by asking him about the quarter gone by and the factors that are driving revenue growth.
Well, the Indian economy has been doing quite well. All our companies have done reasonably well. We expect to continue to do well. And we expect our results will continue to be good.
This time around, the monsoon has been patchy, and I understand that two of your businesses are reliant on the kind of demand that the monsoon throws up. So, what is your view on the situation? How has business been impacted?
The monsoon has been reasonably good. It has not been perfect, but it has been reasonably good. And I expect agricultural output will be good. And demand from the rural areas is already picking up and will continue well.
So if you could give us a sense on how the whole rural pie is shaping up, because I understand that there were some disturbances post the whole GST and the demonetization which happened. Is rural growing faster than urban, and how are volumes really shaping?
In Godrej Consumer Products, where we have considerable urban sales as well as considerable rural sales, the rural growth rates are higher than urban growth rates. So rural is doing quite well. And the base is smaller, so growth rates can be higher.
So what about volume growth? What is your estimate on how volumes will shape up this time around?
I think volume growth is quite reasonable. Most of the sales increase are coming through volume increases, not price increase.
One segment that has been impacted has been the household insecticides. That's been a bit weaker this time around. How do you expect this to shape up going forward?
No, household insecticides has not been affected. What has happened is some people are getting away with making illegal agarbattis, which have not been approved by government bodies. And then when they are caught, they change the brand name, etc., etc. So that has made a difference.
So I also want to talk to you about the input costs. That has been a cause of concern. Run us through how do you think input costs will shape up going forward?
I think the input costs are quite reasonable. At one time when the crude oil prices had shot up, because crude oil is an input for a lot of products like packaging, etc., there was a concern. But then crude oil has come back down. And so I don't expect much of a negative from input costs in the year ahead.
So you expect it to be at reasonable level?
Reasonable level, yeah. And the price index also came out yesterday, it's only 3.3%.
So Godrej Properties is a company where you all have been clocking significant growth, but in the last quarter we've seen some sort of decline in the booking value, about 807 crore versus 1,000 crore that has been clocking every quarter. So what do you attribute this decline in?
That fluctuates from time to time. It depends on the particular quarter, order booking propensity, etc. But we expect, last year was a record year for Godrej Properties in all respects. This year, because of some of the accounting changes and all in the first couple of quarters, our performance, our exhibited performance has been a little poorer. But over the year, we'll make it up.
A word on the kind of demand that you expect in the whole real estate space because of the kind of regulations that have been coming on.
I think the demand will continue to be good, especially from reliable developers. And I expect there is a lot of demand for genuine, reasonable priced housing.
Just one final question as we enter 2019. It's an election year. Lots of changes expected on ground. What is your outlook? Will the year for the company, for Godrej Industries, be better than last year? How do you think it will shape up?
In the past, most election years have been good for our business, because there's a lot of activity going on, etc. So I expect it will continue to be a good year.
Okay, those are very disappointing numbers coming in from Indoco Remedies. There is a top-down miss. Revenues have fallen by more than 17%. The profits have come down to 5% versus about 14.5%, and that is driving about a 7 or 8 crore loss on the company's bottom line versus a profit in the prior quarter or in the quarter of last year. Indoco Remedies is sliding on the back of these numbers. Very disappointing across all the parameters. We'll try and glean more details, but for now, the basic numbers are a top-down miss. And some updates coming in on the Punj Lloyd case as well, where the NCLT has granted the company more time to settle with the lenders, which include ICICI Bank. So that's some relief for Punj Lloyd, which is why the stock is reacting positively. ICICI Bank will also come up for you on your screen. Punj Lloyd's exposure important, but it's not perhaps the biggest account for them. We'll slip into a very short break on that note. Up next, we will discuss the big earnings that are expected today. Tata Steel, Sun Pharma and Glenmark will report their Q2 numbers, the key expectations on the other side.